5 minutes to the gentleman from Kentucky, Mr. Barr, the originator of this CRA.
The gentleman from Kentucky is recognized for 5 minutes.
Thank you, Mr. Speaker, and I thank the gentlelady, the chairwoman of the committee, for her leadership in fighting the politicization of capital allocation and the politicization of retirement savings. Mr. Speaker, today, House Republicans stand on the side of retail investors. We stand up for millions of Americans around the country who are increasingly asking themselves this simple question: when will I be able to retire? This Congressional Review Act measure that I am offering is a bipartisan, bicameral joint resolution disapproving of a Department of Labor rulemaking that will politicize Americans' retirement accounts and jeopardize their retirement security. This measure simply states that retirement plan sponsors be required to prioritize maximum financial returns for investors ahead of non-pecuniary factors like environmental, social, and governance standards, a political agenda. We do so in a moment where 1 in 5 Americans have saved nothing for their retirement, including 1 in 3 baby boomers, the generation closest to retirement. We do so in a moment when 78% of Americans are either extremely or somewhat concerned about affording a comfortable retirement. And we do so in a moment where the gap between the amount of money that Americans have saved for retirement and the amount that they will need for retirement is $3.8 trillion. That's why, Mr. Speaker, Congress must act to block the Biden administration's recent rule that greenlights so-called ESG investing in millions of Americans' retirement plans, plowing them into less diversified, higher fees, and lower performing portfolios at precisely the time that we need to maximize financial security for Americans approaching retirement. So let's consider the facts. According to a recent Wall Street Journal report, ESG funds carry 43% higher fees than non-ESG funds. That's what they want. They want Americans to be forced into higher fee funds. A recent study from NYU and the University of Southern California found that over the past 5 years, global ESG funds have underperformed the broader market by 250 basis points per year, an average of 2.6% lower return than non-ESG funds. And this stands to reason because ESG funds are by design less diversified. This is investing 101. When you discriminate against energy stocks and you are heavy in tech, when you're in a tech sell-off and when energy performs the market, who loses? The American retail investor who is unwittingly invested in these fraudulent cancerous funds. This means that an investor who put in $10,000 into an average global ESG fund in 2017 would have realized a $1,750 lower return than if they had invested in the broader market. And while some of my friends on the other side of the aisle argue that ESG investing is actually driven by investors themselves, not ideologues at asset management firms or in the White House who want to push their environmental or social causes at the expense of retail investors, a 2021 study conducted by the University of Chicago and FINRA proves investors largely do not care. 21% of investors don't even know what ESG stands for. Is that popular? Is that what popular ESG is? And this neutrality nonsense. Look, nobody's saying you can't invest based on your values, but this bill would steer people unwittingly into these funds, and the status quo does not deny people to invest based on their values. It just says that the default has to be to maximize returns. So, Mr. Speaker, this debate today is not about investor protection. It's about the ability of investors to maximize returns. It's also about energy security. Even if you don't have a retirement account, this radical ESG movement is hitting your wallet. Since President Biden took office, his administration has waged a war on American energy production, not just holding up leases or blocking infrastructure, but through financial regulation, the weaponization of financial regulation to divert resources and capital and financing away from the American energy sector. A 25% decline in investment in natural gas and oil investments since 2021, and the result, gas prices are up 40%, and diesel prices are almost double. Household energy costs hit a 10-year high this winter, costing average American families $1,200, according to a report from the National Energy Assistance Directors Association. And these price hikes and the decline in investment in our energy supply come at the exact time that the Biden administration itself estimates that by 2050, almost half of our nation's energy supply will be made of oil and natural gas. Mr. Speaker, we need more, not less, capital investment and financing of American energy. So I implore the administration, it's time for you to end your assault on energy production that is fueling 40-year high inflation. We as members of Congress cannot allow this administration to continue to perpetrate this war on American energy at the expense of investors. And with that, Mr. Speaker, I yield.
Gentleman reserved.